I called out 100x altcoins with proof, buying more crypto online and stacking low cap altcoins. Before altcoin season is the best thing you can do for your financial future. If you want a chance at buying some new altcoins that can potentially give you Cardano-like gains, then you need to watch this video. Because not only do I have altcoins that can give you gains like Cardano, but I also called out 100x altcoins, and here's the proof. I called out coins like Research Coin at a $14 million market cap on July 26th of 2024. Research Coin hit a high recently of $148 million in market cap, and there is so much more to come. I also called out altcoins like ChainGPT on August 23rd of 2024. ChainGPT hit a high of $330 million in market cap on January 10th of 2025. It also recently got listed on Binance Futures Trading. I wouldn't be surprised if that was the reason for the recent pump, seeing as how Binance could potentially list ChainGPT for spot trading. Aerodrome also called out at a $450 million market cap on July 26th of 2024. Aerodrome recently hit a high of $1.5 billion in market cap. And I know everyone is scared right now because the markets just took a massive hit. And honestly, it could go even lower. So we're going to check out the overall markets in a second to give you a quick update. But first, I would really appreciate a like on this video and comment down below on any altcoins you want me to cover on this channel in the future. You comment with the most likes or shown to have the most interest will be the altcoin that I choose to make a video on. And just so that everyone's aware, I'm going to start including chart analysis sections in each of my videos so that we know exactly when the peak of the market is going to come, because the time is approaching ever so quickly. And this is a time where we need to pay the most attention to the markets. What you're looking at here is the economic cycle, aka the business cycle. Now, I'm going to also show you in the next slide how this affects the Bitcoin cycles and the Bitcoin chart. Now, as you can see here, it is a time versus GDP growth chart. Now, on the left side, you have the economic performance. So whether the economy is doing terrible here at the bottom or outperforming here at the top, you have a baseline that sits at 0 here in the middle. So to start off, you have the expansion phase, that is this part of the chart here. And then you have the peak part of the cycle, where usually crypto and stocks perform pretty well. You also have the contraction phase where you have a slippery slide, and this is kind of where crypto and stocks don't do so well. And you also have the recovery phase here where we're not quite past that 0 mark yet, but we have a chance to enter the expansion phase. Now this 0, this line going across here, dictates whether we are in a recession or we have economic stability and possibly even growth. Now GDP is tracked over a month to month basis and year to year. So it would be from January of this year to January of last year. When we get into February, it will be from February of this year to February of last year. And we can also look at the GDP growth month over month as well. So how well are we performing throughout the month of February versus the current month that we're in now? And that data comes out a month after each month finishes, of course. So now that you have a general idea of how the business cycle works, I want to show you the actual data of how the US economy is performing and generally how the world and global economy is performing. So if you look here recently in December, we had 49 points, 48 points in November, and 46 points in October. Now you're thinking to yourself, what the hell does that mean? That number has no significance to me, but I'm going to explain to you exactly what that means. This is the ISM business chart. This stands for the Institution for Supply Management, and this pretty much signifies how well the economy is doing. And this is more so targeted at businesses because, as we know, these massive conglomerates in all businesses is what truly funds the market's growth or contraction at the end of the day, right? Yes, the middle class and the lower class have something to do with that as well, but that is for a separate video. Now, if you're looking at this chart, similar to the business cycle chart, the 50 range for us really signifies whether we should be looking to start selling off some of our portfolio, because that kind of means we're going into the most bullish part of the cycle. I'm going to show you on here what I mean by that. If you look over here, we haven't crossed the 50 mark yet. As of last year, March, we got about 0.3 over, and you can see how well the Bitcoin and the overall crypto market did when we crossed over the 50 mark last year of March. Now we're actually going to go 5 years back in the chart, and I want you to look at something very interesting. The peak, or at least one of the peaks in the 2021 year bull cycle, we had a 64.7 rating in the ISM. If you look back at the Bitcoin chart, we also had a top in Bitcoin around the same time. And as you can see, we kind of led up to that, crossing the 50 point in 2020, and we never really had another downturn until we peaked at March of 2021. You can also see, if we go back even 10 years ago, we have the peak of 2021, but we also have the peak of December 2017. And this is also around the peak of that bull cycle as well when it pertains to Bitcoin and crypto assets. Whenever we pass the 50 mark is when we get extreme upswings in the general market, because the government has started to print at this point and businesses are starting to get a lot more influx of cash through people that are from literally the middle class, which are willing to start buying products and consumer goods again. So in my personal opinion, I think that the ISM is one of the best ways to track where we're at in the cycle. And it's crazy that I'm even telling you this, because these are some of the things that most investors don't really know about or don't really look at, but these are probably the best ways to detail where we are in a particular cycle. And you can see here on the inverse as well, when we had some big dips, you can see the crash, right? You can see that we got a massive crash on this graph as well. Massive crash around 40 points. As soon as we crossed that 50 point, and right now we're currently sitting at 49 points. So we're not even at the point where we should even be thinking about selling it. I think once we get up towards the 58 to around the 60, when we cross the 60 level, I certainly think it should be time to be taking some profits. But everyone's scared right now. They think the bull cycle's over, and I'm like, the ISM hasn't even peaked yet. What are you worried about? And just to detail one more thing that correlates with not only the Bitcoin chart, but the interest rate hikes from the FOMC meetings also have a lot to do with where the ISM goes and where the business cycle goes. So we have a few of those meetings coming up, and I'm going to be tracking this to see how much the Fed decides to either slash interest rates, or if they decide to even keep them the same on January 28th and 29th, or in March 18th and 19th. And as we can see here on the previous FOMC meetings, that once the Fed starts to raise interest rates, right, we go into a bear market. And you can see 2022 was nothing but interest rate hikes after we came from being at damn near zero. 2.5 is about as low as you can possibly get for interest rates. And you can see that the market performed so well throughout this entire year because it was cheap to borrow money. And as soon as they started to raise it and make it more expensive to borrow money or take out debt, we've seen a bear market. And as you can see, if you go across the chart and we go over to September, that as when they first started to lower interest rates, you can also see how the market picks up at this particular part of the year. The one thing I want to bring to your attention is that this is a 6-month lagging indicator, meaning once the Fed decides to make a decision on something, it usually doesn't have an effect on the market until around roughly 6 to 8 months out. So that's why you can see here that when the Fed started to pause rates, you didn't see much movement in the actual market until later on of 2024. In my personal opinion, I do think the Fed is going to at least cut the interest rates to around 0.25 come March. And I'm not so sure for January per se, because the labor markets are doing pretty well overall. I think that we're going to at least stay exactly where we're at right now, and then we'd probably get another cut in March, which would definitely spark another spike in the markets as well. So last but certainly not least, we want to look at the volume profile, and we also want to look at the RSI. So as you can see here, we're just below 50, so we're pretty much about neutral. The market could go either way at this point. And you can see here, if we break this massive volume candle at around, like I talked about last video, around 90, I would say 92K, because you have one more right here, and we get a break below here, you can see how there's no volume trading in the area of 66K to around 90K. So we probably see a pretty drastic drop, and you might get some slowdown at some certain parts around here, around 85, 86K or so, because there's previous volume candles. But if we're not able to hold here, we definitely would end up breaking downward to around the 70K level first, and then possibly even lower into the 60K range. The likelihood of that happening is actually pretty low in my opinion. I feel like at this point we're just seeing some price retracement and some healthy corrections in the market. I don't think we're going to to drop back down to the 70-point range, but this is something also to look out for. On the RSI, I do want to see us start to build slightly higher lows, and I'll make sure to zoom in on this chart so you can see for yourself, but we're slightly, ever so slightly made a higher low on the RSI as well. So what I would like to actually see is it peak above the 60 range, maybe around to the 65 range, and then make another higher low to see if we're trending in the right direction. You can actually see here that on the RSI, we built a bit of a uptrend, and it also dictates where we will go in the shorter to longer term. Now that you know where we're at and you have an idea about where we are heading, I want to talk to you about the altcoin that was mentioned in the comment section just a few videos ago. I've recently heard some chatter about this altcoin as well from other influencers and other people in the space. And this altcoin that everyone's been talking about is Swell. Swell is a liquid restaking platform on the Ethereum network. Liquid restaking is exactly how it sounds, and simply put, while your ETH is staked on Swell, you earn what is called LST, and you can now take that same LST and go and trade on other platforms or buy more ETH to then restake that ETH. This would be the equivalent of you staking your crypto and receiving a gift card in return that you can now use to buy other crypto assets or just buy items in general. And for all intents and purposes, I want to be very, very transparent in this video and let you know that yes, this is a Ponzi scheme. This is all derivative based because you're earning yield on an asset while restaking that asset while gaining more yield. But you also need to take into account that this is the part of the market where these types of platforms usually perform the best, because imagine the price of ETH going up and then the amount of yield you have growing while being able to take that yield and restake that ETH while the price of your newly derivative stake ETH goes up, while that also creates yield, and the cycle continues. That's why it's a Ponzi scheme, but that's also why you can make a ton of money. But I do want you to proceed with a lot of caution. Well, surprisingly, is only at a $50 million market cap. But where I was extremely surprised is that Swell has over $1 billion already locked in total value on their platform. This is a stupid amount of arbitrage. This is a 20x difference in market cap to total value locked, which generally means a 20x in price appreciation. Now, this is not guaranteed, and this is of course not financial advice, but I would usually be looking to get a 1-for-1 when it comes to market cap and total value locked. Not to mention that Swell is easy for the average retail investor to pick up, seeing as it is already on a lot of these major exchanges. Exchanges like Coinbase, Bybit, BitGet, Gate.io, CoinW, KuCoin, Kraken, and of course Uniswap. The current price of Swell is actually the lowest it's ever been, and that price is set around 2 cents per token. Seeing as how it came out in early November, and considering where we are in the current market, I would personally go ahead and pick it up at 2 cents. Not financial advice, of course, and please go and do your own research. And if you're looking to take advantage of one of the last dips that we have in this crypto bull market, click the video up on screen and copy my crypto portfolio. Thank you, and I'll see you there.